Hello my friends, Dominic here. I wanted to record a quick video about a piece of content that I made yesterday or the day before. I'm not sure when I'm going to be posting this, but about price testing. So the thing here is that eCom owners think that they will throw the darts and hit the right spot on the first time, on the first try. And that's usually not the case. So what we see is, as I said in this post right here, 93% of brands that run 3 or more price tests find a new optimal price in the first couple tests and average 5 to 10% more profit. And imagine if you imagine you have a 10% contribution margin and you increase your price by 10%. It is scary. It is something, I think I've touched it here. What happens if somebody sees my price or buys from me and then sees a different price and then gets mad? And people in today's environment have to change prices all the time. And prices are dynamic in the first place. You buy roses in June, it's gonna be cheaper than if you were to buy it on Valentine's Day, right? So that was just an example. But people are going to have, you're going to have a setback. You're going to get negative customer experience from this. But it doesn't make up for the increase in the profits. And also one thing you have to know, you have to measure this with profit and not conversion rate. Because if conversion rate goes down by 25%, and I gave a really interesting example here. You have a $50 hat and you bump it up to $70. Pretty steep increase, right? And you lose 25% of your orders when you raise your price. So that's a third of your orders. And right here, you always want to first start, I'm going to go over this real quick, with your goal in mind. Okay, so if you want to have a high lifetime value, less orders might not be the good move here. But just so you see as an example, revenue is going to go up by $50. You might be thinking that is nothing that's significant, right? But the gross profit is up by $175 and the profit per visitor is up by 35%. And so you might go into your dashboard and see that conversion rate is down. Oh my God, what do I do? But on the back end, the profits are actually much, much better. And you have an easier business to run overall. As I said, you have to determine your goal. If you want more lifetime value, that might not be the best option. And here is the simple price testing framework. Determine your goal. Think about what you want to achieve with your price test. So if you're trying to grow profit margins, top line revenue, or get majority of market share, you are going to go different ways, right? So you always make sure that you determine that and then choose a category and products within those categories to test. I will go over A/B testing, prices, and there's a couple more methods: cost plus pricing, direct pricing research, stuff like this. But as we're, split testing agency, we want to focus on this, and you want to collect data. We usually advise about 250 to 300 transactions per variant. And the best platform to use for price testing is Intelligence. It is a Shopify integrated app. Every price change will be consistent throughout the whole funnel. That's one of the best things about it. There's innovation on top of innovation. If you think about this platform, but one of the good things is that wherever you have that product price, that can be, on the home page, in your collections page, on the PDP, in the cart, or on the thank you page as a post-purchase upsell, it's always going to stay the same. And it was built for the sole purpose of helping D2C companies get a grasp of their economic drivers by A/B testing them. And the reason I'm going over split testing prices is mainly because, just think about this for a second. If you make a change and compare week over week, you can have, Black Friday sale, you can have Father's Day, you can have, so many things. Facebook is down for a day, or you're out of stock. Anything can happen. And then it's going to be unreliable data. It's going to be, just difficult to understand what was exactly what were the metrics before, what were the metrics after. The simplest way is to get the same traffic at the same time, split it 50-50, and see the difference. So from there, you want to analyze your results. And as I said, intelligence measures results based on profit. So you'll be able to see, even if your revenue didn't change or your conversion rate went down, you might have more profit on the bottom line. And, just to finish it off, like, your discounts and prices are just too important not to test them, especially in this dynamic economic landscape where inflation is crazy and, consumers are watching out where they spend their money. You need to be testing to find the optimum and the optimal price. So if you want to be able to draw a curve of price elasticity, try testing, 33% on the control group, and then the other third on lower, and the other third on higher price, 20% higher price. So you're able to see how much is my conversion rate going to change if I change the price. How much are willing to pay for my product? And you can measure this by looking at the amount of change in conversions relative to the amount of price change. So let's say you increase your price by 10%. Will your conversion rate drop by 1%, 10%, or 30%? And if you can increase your price by 10% and conversion rate drops by 1%, you barely lose any sales, but make more profit on each order. So that results in higher contribution margins. And that's what we want to shoot for, right? A more profitable business, easier to run, more efficient. And as I said, if you do want to go and grow the business and get repeat customers, just know your priorities, know what you want. Do you want more orders or more profit? Make sure you think about that in the first place. So if you have a high margin product, you can test lowering the price or discounting it. As I said, don't be, it is scary to do these. And that's why I even made a specific section for these kinds of objections, because we understand. But if you have great margins and you want to move as much of your product as possible, if you reduce your product's price, net margins almost stay the same, but you might get an outsized increase in conversions. So for high margin products, the play here could be to lower the price and drive volume. I try to emphasize this as much as I can. It depends on your goals. Question from you: could it even be possible to get more profit with a lower price? And yes, the answer is yes. The bump in conversions can outweigh the loss in the core price and increase profits overall. And you might not even see much on the dashboard. As I said, you might see revenue at the same level or just a little higher, and think to yourself, well, that's not too much. But once you log into IntelliGems, the good thing is that they have the profit. They measure profit because it hooks up on your backend and it sees your COGS and your variable cost. So that is extremely powerful, because then it's just a whole game changer. You're able to see how much you're pocketing after that specific A/B test. The founder, Dave Rucock, is praising IntelliGems. They have a partnership going. They've mastered the offer testing. They've mastered everything when it comes to, just profit rate optimization. And that's how they're eating up the majority of market share. So that's a quick example for you why it's a good idea to test this. Question number 2. If I have the margins to lower my price, do I set a discount or just lower the core price? And discounting is a great way to get directional price elasticity feedback, but it might attract customers that are not going to stay with you long term, promo seekers, right? So the discount will inspire different behavior. It might even perform better at first. Some people just see the red and just purchase. But you ultimately have to know your brand. There's not with this, anything that I show you, even in like CRO, traditional CRO that I've been, talking about for the past 15 months, 16 months, there's no one size fits all solution. So make sure you know your brand well and understand how these people will behave on the long term. And the question you have to ask yourself here is this: am I pulling forward future purchases with this, or just getting promo seekers as a larger percent of my customer base who won't return and bring me customer lifetime value? Second, and might be maybe a more scary approach is increasing the price, right? But if you are low on margins, it could be a good test. Worst case scenario, you don't like what happens, you don't enjoy it, or you see very much negative feedback or a drop in profit, you can just change it back. You can seriously just change it back. And, but the uplift, the potential gains to be had from just running the first test and just seeing and taking that leap of faith, however scary it can be, it might be a good move to just test. So before you do this, calculate if the same amount of people bought at this higher price, how much extra profit would I bring in, and how much conversion can I lose? That's ultimately what you can, what you have to understand. I talked about this example, but here's where it gets interesting. If you are operating at a 10% contribution margin, a 5% net increase in price, which could be by reducing a discount, increasing a product's price, getting rid of free shipping, something along these lines. If this improves your profit per order by 50%, you can afford to lose half of your conversions. You can afford to lose half of your conversions. And there's also a question that comes here. What if my CAC increases because I've increased my prices? And very simple. You have 2 price points. In the variation, you just raised your price by X%. Doesn't matter here. Conversion rate is going to go down somewhere between 5 to 30%. And because it's a split test, you're paying for the same amount of visitors in these 2 groups, the control and the variation, right? And the CAC is going to be higher in the higher price group because we have the same amount of spend coming to the website, but a lower number of conversions because this price is higher. And therefore, the cost to acquire any given customer will be higher. But that's not what you want to look at, because the profit is what matters here. And if you're holding conversion rate constant and just moving average order value up, which is directly impacting gross margin, the CPA will stay the same. Last example. If you have thin margins, let's say 10%, a 10% increase in price will double your margins. That's a 100% increase in your margins. Even if your conversions fall, 80%, you will take home more profit at the end of the day. So I hope that clarifies how big of a thing price testing is. And real quick, just 5 best practices. 6, what a mistake. Choose your winner based on profit. As I said, do competitive research. Keep your price tests relatively short. Nothing after 4 weeks is really reliable. There's sample pollution. There's a lot of things. Keep your CX team in the loop about testing. Double check every single placement when you may mention the price. Very important. And consider excluding certain traffic from your tests.